Let's jump right in, shall we? Grab that coffee and get comfortable because we're about to do a deep dive into the Singapore stock market. We've got a fresh financial news update straight from Singapore to guide us, the kind serious investors use to kick off their day. And it's got some pretty interesting stuff in it this time. We'll be looking at a telco giant making moves in Vietnam, a property developer looking at China's recovery, and even getting a glimpse into how Singapore is turning into a deep tech hub. But first, what's the overall mood of the market? Well, Singapore stocks opened a touch lower on Tuesday. The Straits Times Index dipped slightly, just 0.1%. But even a small dip like that can tell us something, don't you think?
Oh, absolutely. Even a little dip like that in the STI can suggest that investors are being cautious. I think it'll be important to watch and see if this becomes a trend or if it just fades away. It could even be influenced by things happening outside of Singapore, like global trends.
Right, makes sense. So a bit of a wait-and-see feeling right now,
Yeah.
but that doesn't mean there isn't any action happening. Let's focus in on Keppel for a second. Their subsidiary, M1, is making a big move by acquiring a 70% stake in a Vietnamese IT solutions provider. They're not just testing the waters here, they're diving right in.
What I find so interesting about this move by Keppel is that it seems to show a broader strategy we're seeing across the board. Companies want to tap into Vietnam's booming tech scene. Keppel's not just buying a company, they're positioning themselves to grab a share of a rapidly growing market.
That's a really good point. It's not just about the acquisition itself, it's about understanding the bigger strategy behind it. And speaking of strategy, let's move on to CDLH Trust, the hospitality trust. They said their net property income dipped recently. So is this a sign that the post-pandemic travel rebound is starting to fizzle out?
It's definitely something to watch. While that initial surge we saw in post-pandemic travel is starting to level off, it doesn't necessarily mean it's a downturn. I think it's more like the travel industry is finding its new normal. More of a recalibration than a complete collapse.
That's a helpful way to look at it. It's about understanding the nuances and not just reacting to headlines. Okay, now let's switch gears and talk about First Sponsor, a property developer who's pretty big in China. They're saying they're cautiously optimistic about a turnaround in their China business. What's giving them that cautious optimism?
Well, the Chinese property market's had a rough time lately, so even cautious optimism from a major player like First Sponsor suggests they're seeing some signs of stabilization at least. But it's still early days. A full-blown recovery in the Chinese property sector, that's a whole other story.
So reading between the lines is key here. Even a small change in sentiment from a company like First Sponsor can create ripples in the market. It's all about paying attention to those subtle cues. All right, let's move on to Starhill Ltd. They're selling some office space in Wisma Atria, which makes me wonder, is this a warning sign for Singapore's commercial real estate market?
It's definitely a move that makes you think. We can't ignore how the way we work is changing. With remote and flexible work becoming the norm, the demand for traditional office space is definitely evolving. So this sale by Starhill Ltd could be a strategic move to respond to those changes.
Okay, so we've got companies making calculated moves, a feeling of cautious optimism, and a hint of adaptation to new realities. But let's not forget those who are riding a wave of success, like Japfa, the agri-food company. They've bounced back into profitability. Their net profit for the first 9 months was a cool US $87.5 million, quite a turnaround from their loss during the same period last year.
Japfa's story really highlights a key point, the resilience of the food sector. Even when the global economy is turbulent, food is still a basic need. Japfa's performance, especially in Indonesia and Vietnam, shows that they can adapt and thrive even in tough markets.
It's a testament to their strategic focus, for sure. And then there's Nanofilm, the nanotechnology solutions provider. They're also doing really well with their third quarter revenue jumping by 10%. What's behind their success?
Well, Nanofilm's riding a few key trends. Firstly, there's a huge demand for advanced materials and nanotechnology solutions across tons of sectors. Think everything from electronics to healthcare. And secondly, they're great at innovating and consistently coming out with new products and applications.
Innovation is powerful, especially in the fast-paced tech world. So we're seeing a mix of strategic maneuvering, cautious optimism, and some companies who are really standing out in the Singapore stock market today. But let's not forget the bigger picture, those big macroeconomic forces that shape the environment for all these businesses.
Right, you have to understand those macro trends. Take Singapore's core inflation, for example. It's expected to cool down to a 3-year low by the end of 2024.
Now that's interesting. Let's break that down a bit. What does cooling inflation mean for everyday consumers and businesses in Singapore?
For the average person, it could mean a bit of relief. The cost of everyday things might not rise as quickly, giving people's wallets a bit of a break.
That sounds like a win for consumers. But what about businesses? Is it all good news for them too?
Well, not necessarily. Cooling inflation can also be a sign of slower economic growth, and that can impact revenues and profits.
So it's a bit of a balancing act trying to manage those competing forces.
Exactly. Finding that sweet spot between growth and controlled inflation is a challenge for businesses and policymakers alike.
Speaking of policymakers, the Singaporean government is making a bold move, injecting a hefty $440 million to boost investments in deep tech startups. That's a serious commitment.
Oh, it definitely is. This initiative is aimed at solidifying Singapore's position as a global innovation hub, especially in areas like AI, biotech, and advanced manufacturing. We're talking about technologies that could completely change industries and tackle some of the world's biggest challenges.
So it's not just about riding the current tech wave, it's about shaping the future of technology.
Exactly. They're building an environment that attracts top talent, encourages groundbreaking research, and gives deep tech startups the resources they need to thrive.
Now let's connect the dots here. We've got cooling inflation and this massive push for deep tech startups. How do these big trends relate to the individual companies we've been talking about? What stands out to you?
To me, it highlights how important it is for businesses operating in Singapore to be adaptable and innovative. Whether it's a well-established player like Keppel moving into new markets or a tech-focused company like Nanofilm pushing boundaries, the ability to adapt and evolve is crucial for success in this dynamic environment.
That's a great insight. It's not just about understanding a company's individual story. It's about seeing how that story fits into the bigger economic picture.
Exactly. It's all interconnected. What happens at the company level and what happens in the wider economy, it's all connected. Yeah, it's like looking at a tapestry. You've got the individual threads, the company stories, but the way they connect with those broader economic patterns, that's what reveals the bigger picture.
That's a perfect analogy. And speaking of patterns, it seems like we can't have this deep dive without talking about deep tech. It's come up a few times already, but I think our listeners deserve a little more context. What exactly makes these startups deep tech? And why is the Singapore government investing so much in them?
You're right. It's a term you hear a lot these days. Deep tech startups are the ones trying to tackle really fundamental challenges using cutting-edge science and engineering innovations. Think artificial intelligence, biotechnology, quantum computing, that kind of thing. Technologies that take serious research and development and have the potential to completely disrupt industries.
So we're not talking about small improvements. We're talking about real game changers.
Exactly. And it makes sense why the government is so focused on deep tech, especially when you consider Singapore's long-term strategy. They want to be a global hub for innovation and knowledge-based industries. By supporting deep tech startups, they're not just putting money into companies. They're investing in a future where Singapore is leading the way in solving global problems.
It's a bold vision, that's for sure. But like any investment, there are always risks. What are some potential downsides or challenges to focusing so heavily on deep tech?
That's a crucial question. One risk is that these deep tech ventures often need a lot of money and have really long development cycles before you see any return. It's not like putting money into a trendy app that could blow up overnight. Investors have to be patient and understand that it could be years, even decades, before they see a payoff.
So a long-term outlook is essential.
Absolutely. And another challenge is the competition. Singapore is not the only country trying to get a piece of the deep tech pie. Other hubs are popping up all over the world, and each one has its own advantages and incentives. Singapore needs to keep adapting and innovating to stay ahead.
It's a global race for technological dominance, and Singapore is making sure it's a contender.
Exactly. And even though the government support is really important, it's also important to remember that success in deep tech depends on the talent, creativity, and entrepreneurial spirit of individuals and companies. The government can create the right environment, but it's up to the innovators to make it work.
So a successful deep tech ecosystem needs more than just funding. It needs a culture of innovation, risk-taking, and collaboration.
Exactly. It's about creating a space where brilliant minds can come together, push boundaries, and turn amazing ideas into reality.
Let's bring this back to our listeners who are tuning in for insights on the Singapore market. What's the key takeaway for them?
I would say Singapore's push for deep tech isn't just a news story. It's a fundamental change in their economic strategy. It's shaping the investment landscape and creating opportunities in new sectors that might not be on everyone's radar yet.
So investors should be looking beyond the traditional sectors and considering the potential of deep tech.
Exactly. It's about knowing where things are headed, like we were talking about earlier. And in Singapore, deep tech is definitely the direction things are moving in.
I like that way of putting it.
Mm.
Now, let's widen our perspective a bit. We've talked about deep tech, but what other emerging sectors in Singapore should investors be watching?
Well, one area that's really interesting, especially given some of the companies we discussed today, is the future of food.
Yes. Food security is a huge topic globally, and for a small island nation like Singapore, it's even more critical.
Exactly. Singapore doesn't have a lot of land for traditional farming, so they're leading the way in exploring innovative and sustainable ways to produce food. We're talking vertical farming, lab-grown meat, alternative protein sources, technologies that could completely change the way we eat.
It sounds like something out of science fiction, but it's happening now.
It is, and Singapore is a hub for this kind of innovation. They're not just using these technologies, they're actively investing in research and development, trying to push the limits of what's possible.
So this could be another area where Singapore becomes a world leader, not only meeting its own needs, but potentially exporting these solutions to the rest of the world.
Absolutely. And for investors, this means there are exciting opportunities. The future of food is a sector with huge growth potential, and Singapore is setting itself up to be at the forefront of this revolution.
It's inspiring to see a nation taking on such a fundamental challenge with so much boldness and creativity.
It is, and it underscores a key theme that's been running through our deep dive today. Singapore's dedication to innovation and sustainability. Whether it's deep tech, food security, or other up-and-coming sectors, Singapore is showing a proactive approach to shaping its future and tackling global issues.
It's a forward-thinking approach that's making a dynamic and attractive environment for investors looking for long-term growth opportunities.
I completely agree. Singapore's story is a compelling one, and it's going to get even more interesting as they keep pushing the boundaries of innovation and sustainability.
We've covered a lot in this deep dive, everything from those tiny signals in the STI to that big vision of a deep tech future.
We certainly have, and it shows just how dynamic the Singapore market is. There's always something new happening, something that challenges our thinking and opens up possibilities.
It's that constant change that keeps things exciting. But as we look to the future, there's still a lot we can learn from what's happening right now. We talked about a bunch of companies making big moves. Keppel going into Vietnam, Japfa finding success with agri-food, Starhill REIT adapting to changes in office space. What can these individual company stories teach us about the overall trends in the Singapore market?
That's a great question. I think these stories show us how important it is to be agile and have good strategic foresight. The companies doing well in Singapore aren't just reacting to changes, they're anticipating them. They're making big moves and adjusting their strategies to take advantage of new trends.
So it's not enough to just be a successful business. You need to be forward-thinking as well.
Exactly. The companies that are succeeding in Singapore are the ones shaping their own future, not just going along with the flow.
That's a really powerful idea.